most important questions, and based on that we are going to understand some concepts, and whatever the questions we are including in this series of the session, that all are important from the exam point of view. Okay, because whatever the questions we including in these sessions, that all are based on the memory based questions of the previous year. So these series of the session is very important, and I hope everyone is maintaining the notes as well. So now let's start the session now. We are also going to start our foundation batch, and that batch is going to start from 7th February 2022. In this batch you will understand everything from zero to advanced level, and by subscribing this batch you will get mock test, ebook as well as a live lectures, so you can just subscribe this batch also. Okay, so first question is, at the end of the 1 year, a sum of the 20,000 rupees at 6% rate of interest, when compounded half yearly, it becomes. Okay, so as we all know that this question is from the compound interest, and this is from the chapter of the calculation of the interest. So look, I just explained in my lectures, that is compound interest formula. Compound interest formula, that is equal to the A is equal to P multiplied by the 1 plus R divided by N to the power N into T. Okay, where A denotes the principal plus interest. A denotes the principal plus interest, and this P denotes the principal. Okay, principal amount that is borrowed. R denotes the rate of interest. R denotes the rate of interest, and this N is most important. Okay, this N represents number of the times. This N represents number of the times interest is compounded annually. Okay, so suppose that, what the meaning of this N? If N is equal to, if I say that is like in this question it is written, that is compounded, the interest is compounded half yearly. Okay, that means in every year the interest is compounding 2 times, isn't it? If it is mentioned that is interest, suppose that in this question, if it is like it is compounded yearly, or say it is compounded annually, that means we should write here N is equal to 1 if it is written that that is compounded yearly, but here it is written compounded half yearly. Okay, that means in 1 year the interest is compounding 2 times. If interest is compounding 2 times, that means N is equal, then that means N should be equal to 2. Okay, because this N represent number of the times interest is compounded annually. Okay, so suppose that if it is written like here, that is at the end of the 1 year, a sum of 20,000 rupees at 6% rate of interest, when compounded yearly, it becomes. Okay, so we have to write here that is N is equal to 1, but here in this question it is written, if at the end of the 1 year, a sum of 20,000 rupees at 6% rate of interest, when compounded half yearly. Okay, so if compounded half yearly, that means we know that in 1 year the interest is compounding 2 times, and if interest is compounding 2 times, that means N would be equal to the 2. Okay, now we know that we have to just find out here A, because the question is the sum is given and we have to find the final amount. Okay, after 1 year we have to find the final amount, and that would be equal to the principal plus interest. Okay, so we know that we have to just calculate the value of the A. So A is equal to, now we have to just write here principal, and this principal will be equal to the 20,000 rupees. Okay, and after that 1 plus, and this rate of interest, if the rate of interest is given 6%, so just write here the 6%. We can also write, if we have to just write 6%, we can also write 6%, that would be equal to the 0.06. okay, because 6 by 100, fine. So just write here 0.06, but here the N also we have to write here in the divide. Okay, so this will be divided by the 2, because the interest is compounding 2 times. Okay, and meantime this 2 multiplied in the time period, and time period is 1. Time period is equal to 1 year, because at the end of the 1 year we have to calculate. Suppose that in the question if it is written that at the end of the 2 year. Okay, so the value of the t would be 2. Okay, but here it is written at the end of the 1 year, so just write here at the end of the 1 year. So this 2, which is the value of the n, and it is multiplied by the 1. Now you have to solve this question by your own self. Now this will be 0.03, and it is just to the power of the 2, and the answer would be, that would be equal to, that is 20,000 multiplied by the 1.03 to the power 2, and that would be equal to the 21,218 rupees. So this is how we can solve these kind of the questions. Okay, now I am telling you a shortest method to solve these kind of the questions, and you may also solve by the formula, and that's okay. And the shortcut is, we are solving the interest questions. We are solving the interest question. That means all the things we just calculated in the parameters of the interest. Okay, so suppose that we know that if in the formula, if I say the formula is a is equal to p plus 1 divided by r, 1 plus r divided by 2 in the case of the half yearly, and it is multiplied by the t. Okay, so this means if the rate of interest is given 6%, okay, if the rate of interest given 6% and the time period is given 1 year, okay, that means r is equal to 6 while t is equal to 1. And because in the formula you can just clearly see that rate of interest will be divided by the 2. That means whenever you just find the half yearly, like the interest is compounding half yearly, that means just divide by the 2 in the rate of interest and multiply by the 2 in the time period. Okay, okay, so if the rate of interest is given 6%, so just simply write here r is equal to 3, and the time period, that would be equal to the 2. Okay, it is divided by the 2 and it is multiplied by the 2. Now we know that for the first year, if I say the principal is, that is 20,000 rupees. So in the first year, the rate of interest will be applied on this would be what? If we have to just calculate this. So we just got that is 600 rupees. The interest would be applicable on this. Okay. If the rate of interest, that is 3%, and the time period for the 2 years. Okay. So, and the another year, this 600 would be the same. Okay, and now the 3% rate of interest again apply on this 600. Okay, so this will be equal to what? This will be equal to the 18 rupees. Now you only have to just sum up this and you will get the answer here. So the interest would be that, now just sum up this, that this would be 600 plus 600 plus 18, and that would be equal to 1218. Just add in this principal amount and you will get the answer. That would be 21,218 rupees. This is how we can solve. Okay, this is our timeline. Okay, and this is our rate of interest line. So if we have to just calculate for the, suppose that we have to calculate for the 2 years, so we know that if the rate of interest will be applied on the 3% on the principal amount, so that would be equal to 600, and in the second year this 600 would be same, and this is we are calculating the interest only. Okay, so this 600 would be same, but in the compound interest, when we have to just calculate the compounding interest questions, so now the interest also will apply on this rate of interest. So this if we just calculate the rate of interest, so this would be equal to 18 rupees. So just write here 18 rupees. Okay, and now just add this and you will get the interest, and just just add in this 20,000 rupees, and you will get the answers. Okay, so you can also use the formula here, and that's okay with all. That is equal to a is equal to p 1 plus r divided by n to the power n into t, and this would be perfect for the exam. Okay, and you have to just memorize this n is equal to number of the times interest is compounded annually. So this is how we solve. Okay, I hope now it is understandable for everyone. The second question is very obvious question, and many times I already explained in my lectures. This question is from the ratio analysis chapter, and where you just have to find out the cost of goods sold value. So like I always explain, the cost of goods sold is basically refers to the cost of sales. Okay, it basically refers to the cost of sales, or many times it is also known as a cost of revenue from operations. Okay, it is also known as a cost of revenue from operations. So, cost of goods sold it refers to the cost of sales, or say cost of revenue from the operations. So basically, the amount includes the cost of the materials and the labors, which is directly used to create the good. Okay, and most importantly, it excludes the all the indirect expenses, which is not related to producing the goods. So whatever the cost we just include in the cost of goods sold, that all related to our direct expenses, that all related to our direct expenses, and that direct expenses related to the producing the goods. Okay, so whatever the expenses our company incurred, whatever the expenses our company incurred on the producing the good, that all included or say that all are termed as a direct expenses, like labor charges. Okay, so that all known as a direct expenses, and in this cost of goods sold we just exclude all the indirect expenses. Okay, so that means in cost of goods sold we only considered sold item manufacturing cost. We just include sold items manufacturing cost. Okay, for just calculating the profit, or say for calculating the actual profit, we have to just find out the sold items manufacturing cost, because in our factory there are a lot of stocks, or say there are a lot of items that produce, but not every item just sold out. Okay, so we have to just find out the cost of goods sold for calculating the profit. Now understand all the direct expenses that are related to producing the goods in our factory, because that are very important. So cost of raw material, if I say the cost of the raw material, that is related to our direct expenses. Any cost of the parts that used to make the product, that is also related to our direct expenses. Another one, that is a direct labor cost, or we can also say that that is the wages that is given to the laborers in our factory for producing the goods. Okay, any supplied used in making the product, that is also known as a direct expenses. Any overhead cost, any overhead cost utilizes for the specific manufacturing site, so that is also known as a direct expenses. So whatever the expenses, we also include a carriage inward, like transportation cost for importing the raw materials for producing the good, that is also related to our direct expenses. So all the expenses that directly related to our producing the good, that is known as a direct expenses, and that most important for calculating the cost of goods sold. Okay, now understand the formula of the cost of goods sold, that is equal to opening stock plus new purchases plus direct expenses and minus closing stock. Okay, so opening stock, that means suppose that in our factory there are already 2000 units available for the sale purpose. Okay, so we already have a 2000 units available in the starting of the financial year. We already have a 2000 units of the stocks, so that known as a opening stock. After that we just purchase more of the units. Suppose let's say we just purchase 1000 units, and now we have available for the sale unit, that is equal to the 3000 unit. Okay, and suppose that one pencil cost, that is equal to 10,000 rupees, so that would be equal to the 30,000 rupees, and this would be a total of the say opening stock value and new purchases value. Okay, now the direct if we say the direct expenses, suppose that the just packaging for these pencils for making this available for the sale, and the labor cost that associated with this. So we also have to just include the direct expenses here. After that, suppose that from these 3,000 units, we just sold 2,000 units. Okay. So in the end of the year, whatever the quantity we just left out, okay, or say whatever the quantity that is not sold, that is known as a closing stock. So suppose that in the starting of the year we already have a 2,000 units, and after that we purchase 1,000 units more, and in the end of the year we just left out with the, that is or say we just sold out the 2,000 quantity. Okay, so we just left out with a 1,000 quantity, so that known as a closing stock. Okay, that's why it would be a minus. So the formula of the cost of goods sold, if I say, that would be equal to the opening stock plus purchases plus direct expenses minus closing stock. So that would be the answer. Okay, I hope everyone just clear with this concept now. Okay, one more thing I just want to include here. Look, there is a very minute difference between sales and cost of goods sold. There is a very minute difference between the sales and cost goods sold, and that is equal to the profit. There is a very minute difference between the sales and the cost of goods sold, and that is equal to the profit. And if profit added in the cost of goods sold, if we just add profit in the cost of goods sold, then it is known as a, then it would be known as our sales. That's it. Okay, so if I say one more formula we can just include here, and say gross profit, not a actual profit. Okay, so that would be a gross profit. So if the one more formula, that is equal to cost of goods sold, cost of goods sold, that is equal to sales minus gross profit. Okay, so there is a very minute difference between the sales and cost of goods sold, and that equal to the profit. So if profit added in the cost of goods sold, that is known as our sales. Okay, if we just add gross profit in the cost of goods sold, that will known as a sales. And one more formula that is important from the exam point of view. So cost of goods sold will be equal to the sales minus gross profit. Okay, I hope it is clear now. Now just understand another question. Next question is related to a small account, and a small account means a saving account in a banking company where the aggregate of all credits in a financial year does not exceed rupees. Okay, so we have to just find out the answer here. So there are some basic features related to small account, and that all we should know about this. That is aggregate of all credit limit should not exceed it in case of the small account, that the answer is a 1 lakh rupees. Okay, and the second feature, that is related to our credit limit, that is related to our credit limit, or you can also say that that is aggregate credit limit of all credit limit that should not exceed of the 1 lakh rupees. Okay, after that, another feature, that is account balance at any point of the time should not exceed 50,000 rupees. That is also important. Please write down these features in your copy. So aggregate all the credit limit in the financial year does not exceed 1 lakh rupees, and account balance at any point of the time should not exceed it with the 50,000 rupees. And another feature, that is aggregate of all debit, aggregate of all debit, and that debit like withdrawal and transfer, whatever. Okay, so aggregate of all debit either in the form of the withdrawal or in the form of the transfer should not exceed in a month 10,000 rupees. Okay, in a month, aggregate of all the debit should not exceed the limit, that is 10,000 rupees. Okay, so these three features that most important related to a small account, and you should just note down this. So if I say that is aggregate credit limit in a financial year, that is 1 lakh rupees, aggregate all debit including withdrawal and transfer, that should not exceed 10,000 rupees. Account balance does not exceed should 50,000 rupees, and at any point of the time, and check issued over 10,000 rupees, check issued over 10,000 rupees will be rejected and returned. Okay. So if the check is issued above 10,000 rupees from the small account, that should be rejected and returned. So these are the some essential features related to small account, and that all should be memorized. Okay, so now understand another question that is related to foreign exchange arithmetic, where you have to just tell which of the following is a direct quote, and one question, one question is related to direct and indirect quote in the form of this. They will definitely be asked in the exam, so this is very important. So if I say if it is from the foreign exchange arithmetic chapter, in definition term, if I say the foreign exchange, in this chapter what we learned, that is foreign exchange is the trading of one currency for another. Okay, so it is trading for one currency to another. So what we understand by the foreign exchange, it is just a trading of the one currency for the another. For example, one can just swap the US dollar for Indian rupees. Okay, so that is known as a foreign, that all we just understand in the foreign exchange arithmetic. Okay, now understand what the meaning of the direct quote and indirect quote in the foreign exchange arithmetic terms. So suppose that now understand what is direct quote and indirect quote, and by only one example I just finished the direct and indirect quote. Just listen very carefully. Suppose that you came to me, suppose that this is you and this is me. Okay, and you came to me and you ask me what is the current price of the rupees and dollar. You just ask me what is the you just ask to me, that is what is the current price of the rupees and dollar. So I said this time just 1 rupees is equal to the 0.013 dollar. You ask me what is the current price of the rupees and dollar, or say what is the current price is running on the market, what is the current price is running in the market of the rupees and dollar, and I say that is this time the 1 rupees is 1 rupees is running equal to the 0.013 dollar. Okay, now no, now you said to me, that is don't tell me in direct way. Please do not tell me in the direct way. You said to me, please do not tell me the rupees and dollar current price in indirect way. Please do not tell me. Tell me in the only direct way. So I just said, okay, in a direct way, if I say, so currently $1 is running equal to the 75 rupees. Okay, that's it. That's it about the direct and indirect quote. Look, understand again what I'm just conveying here. This is very important. This is the example for understanding the direct and indirect quote. Suppose that this is you and this is me, and you just came to me and ask, just tell, just and you just came to me and just ask, please tell me about the current running price of the rupees and dollar. Okay, so I just told you that is the currently in the market 1 rupees is equal to 0.013 dollar is running in the market. That is the currently price. So you just stop me and said, please do not tell me indirect way. Please tell me direct way of the price running, currently running the price of the rupees and dollar in the market. Okay, please do not tell me indirect way. So I just said to you, that is okay, in direct way if I say, that is 1 US dollar is running in the market with a 75 rupees, or say will be equal to the 75 rupees. Okay, so that is equal, that is known as a direct quote, and that is known as an indirect quote. Now understand, direct quote, if I say in the definition term, that is direct quote is when the cost of 1 unit of the foreign currency is expressed in the domestic currency. Okay, when 1 unit, if what we understand by the direct quote, that is one, if 1 unit of the foreign currency, if 1 unit of the foreign currency is expressed in the domestic currency, then it is known as a direct quote. Like here, that is 1 unit of the foreign currency, that is equal to 1 US dollar, and that is equal to the domestic currency. So this is known as a direct quote. Okay. Likewise, if I say indirect quote, what we understand by the indirect quote? So indirect quote, that is here, 1 rupees is equal to $0.013. So if I say indirect quote is when 1 unit of the domestic currency is expressed in the terms of the foreign currency, then it is known as a indirect quote. Okay, so this is a basic difference between the direct and indirect quote. I hope it is now understandable. So the answer of this question would be, if I say is which of the following is a direct quote, so the answer would be that is $1 will be equal to 48.90 rupees, because here, if the 1 unit of the foreign currency is expressed in the terms of the domestic currency, then it is known as a direct quote. I hope now this is understandable for everyone. So that's all for this session. I hope this lecture would be very useful for you. And if you are liking our content, please do not forget to hit the like button. And if you have not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get the notifications of the live lectures as well as the notifications of the important news related to your exam. Okay, so thanks for watching me here. Thanks for joining me here. Like this video if you are liking our content, and share this video to your friends as well.